Hello, Manju. So good to have you with us today. I had some questions for you regarding financial inclusion and open banking, which is a new concept that probably many people do not know about. But it could be quite useful for people who perhaps do not have access to standard banking or credit services. So let me start with this issue of financial inclusion or lack of financial inclusion. Is this a problem in the US? Is this a problem elsewhere?
I think it's a problem globally. I mean, we know in developing economies that tons of people don't have access even to a bank account, but it's not just a developing economy problem. Well, at the FDIC, they do a biannual survey of the unbanked and the underbanked, and the numbers have come down. But even now, the unbanked in the US are 4.5%, and the underbanked are in the order of more than 14%. So this is a problem globally. It's not just about developing economy.
In a developing economy, let's say like India's, for example, how did these numbers look like until recently?
So India so there are maybe two numbers to consider, right? And so one, traditionally when we think unbanked, we're thinking you don't have a bank account. But for me, I think financial inclusion is not just about having a bank account. It's also about having access to formal credit markets, right? And so in India, you know, it used to be there were tons of people without a bank account, but then the government, they introduced a scheme called the Prime Minister's JDY scheme, in which they said everyone can have a bank account. Now, what are the barriers to having a bank account? It actually costs money to have a bank account. You need a minimum balance, there are fees, there are documentation. And so what they said was, look, anyone can open a bank account. It's going to be free. They're not going to be fees. And if you don't have the documentation, you can still open it. The bank will work with you. You have 6 or 12 months in which you can get the documentation together. And so now 99% of India has a bank account, thanks to the JDY scheme.
Now, is having a bank account sufficient to be able to access traditional means of credit? Probably the answer is no, right?
Right, exactly. I think having a bank account is a good first step. But in order to have access to credit, at least in order to have access to formal financial markets, traditionally you need a credit score. So if you're a person with no credit history or thin credit files, it can be really hard to access credit. And then what do? You go to a money lender, or you go to pawn shops, or you do payday lending, which, as we all know, can be very, very expensive.
So then this brings us to this concept of open banking, right? Can you tell us a bit about what this is and how it might help people with a thin credit record access formal credit sources?
Sure, Campy. And so open banking is the idea that as a customer, I can share my financial transactions with any financial institution, sort of my choice. And so it needs to be, the consent is from the customer, so it's customer driven, and you can sort of share it. And so the way, and so India has embraced this sort of wholeheartedly. 40 countries have sort of said we have an open banking mandate, but the level of adoption is very, very different across countries. And so what India said was, here's what we're going to do. We're going to have open banking, and we are going to sort of build the payment rails. So this is a publicly funded digital infrastructure. So you have the rails and anyone can sort of put an app on it. And then it's free for people. So Google Pay can put an app, whatever, and then you can access the app and you can make payments sort of in real time. And so now, instead of having a cash trail, so think of a roadside vendor, selling roasted corn or selling masala chai, right? Now, traditionally, they would just get a lot of cash. And if they go to a bank and say, I want a loan this, you have no credit history, you can't verify your income, how can we make a loan? But now you have a QR code, you can scan it. And so even though, each cup of tea might be 50 cents, you can say, well, you could see my monthly revenue is, let's say, $1,000. So then the bank could say, no, okay, maybe I can lend a couple of hundred, right? And so you've transformed um, sort of having no history at all because of cash to having a verifiable digital history. And it's costless, it's cheap, and it's verifiable, and that makes all.
So this cash flow based lending that can result because of open banking, do you actually see that have a positive impact on the access to credit for people in India?
We do. So we got data from a number of sources in India, including the Credit Bureau, and we look at when UPI is introduced in India. So
And this UPI is the
United, thank you. So it's the rails that the government introduced, and so when it's introduced in India, then what you see is then a necessary condition is that the banks have to sign up. And once they do that, in areas where you have more banks sign on, you really see this sort of taking up, and you see an increase in credit access. And similarly, the internet connectivity needs to be cheap and efficient. And so when Jio rolled out all these 4G towers, that really increased the telecom sort of connectivity. So the average distance to a telecom tower used to be 15 kilometers. It's now like 2 kilometers, and it's incredibly cheap, right? The average Indian mobile uses 24 gigs of data a month, right? So it's really cheap. And so what we find is in areas where you have cheap and easy connectivity, you also see greater access to credit, thanks to this open banking and digitally verifiable sort of payment history.
Great. So it sounds like technology and government support for innovation and technology can actually help people who do not formally access credit markets right now. It can help these people down the road. It can help with financial inclusion. India sounds like a great success story in this respect. Open banking seems to have made a huge impact there. Just as a parting thought, what might be different in the United States when it comes to the adoption of open banking and its impact on increasing financial inclusion?
Well, we don't really have the same mandate, at least at the moment, in the U.S. So, we don't have this publicly funded sort of digital infrastructure. In fact, it's pretty hard to make payments at the moment, right? And so if I want to make a payment to you, we both need to have Venmo or PayPal. If you have Venmo, I have PayPal. We can't really make the transaction. And so it gets hard. Now, FedNow and all is trying to sort of move us a little bit in that direction. And we'll see how far we can go. But what are the elements? Sort of having this verifiable digital history. The customer is king. Like, who owns the data? That is still a matter of controversy, not just in the U.S., but in many other areas. In India, they said it's the customer who owns the data. And so they can sort of give it. And the advantage of it all being digital is it's almost instantaneous. Now, there have been some changes in the U.S. in which credit bureaus have tried to say, okay, let's try and take bank statements into account or utility bill payments into account in the credit score. So that's a partial resolution, but I think it's still at best a partial resolution. We still have a long way to go.